von der Leyen vows to build a new independent Europe. British employers cut jobs at the fastest pace since 2020. And Netflix switches to an all-cash offer for Warner Brothers. Welcome to the Economic News Bulletin. We start off with the World Economic Forum, where the European Commission President Ursula von der Leyen has warned that tariffs proposed by US President Donald Trump over Greenland is a mistake. In a speech at the World Economic Forum, von der Leyen also stated that the series of recent geopolitical shocks will force the European Union to build a new independent Europe. She added that the European Union was on the verge of concluding a free trade agreement with India, although work remains to get it over the line.
That geopolitical shocks can and must serve as an opportunity for Europe. And in my view, the seismic change we are going through today is an opportunity, in fact, a necessity, to build a new form of European independence. And this need is neither new nor a reaction to recent events. The good news is we acted immediately, whether on energy or raw materials, defense or digital, we're moving fast. But the truth is also that we will only be able to capitalize on this opportunity if we recognize that this change is permanent. Of course, nostalgia is part of our human story, but nostalgia will not bring back the old order. But it also had two major effects.
Moreover, EU Foreign Policy Chief Kaja Kallas has announced that the European Union is planning new export restrictions on components that could be used by Iran to produce drones and missiles. The measures, part of the broader sanctions linked to Tehran's crackdown on protesters, are expected to further limit Iran's ability to supply Russia amid the conflict in Ukraine. Kallas told MEPs that the EU is preparing these steps to ensure the compliance with international regulations while targeting industries linked to military production.
To feed Russia's continued aggression against Ukraine. In addition to that, we are working on new sanctions.
French President Emmanuel Macron said on Tuesday that France preferred respect to bullies and the rule of law to brutality, calling on Europe to defend effective multilateralism against China and the United States, and should be ready to deploy its anti-coercion instruments, a powerful EU trade tool that has never been used.
We do believe that we need more growth, we need more stability in this world. But we do prefer respect to bullies, we do prefer science to plotism, and we do prefer rule of law to brutality. You're welcome in Europe, and you are more than welcome to France.
For his part, the US Treasury Secretary Scott Bessent has warned the European countries not to retaliate over Trump's aim to take over Greenland and urged them to have an open mind. Bessent also said that he had a meeting with his Chinese counterpart in Davos late on Monday and discussed soybean purchases. He noted that rare earths are flowing from China as expected.
Sanctions on countries all the time, but he can use a lesser measure like tariffs to try to also.
Moreover, the U.S. Trade Representative Jamieson Greer has stated that U.S. President Donald Trump's threat to impose tariffs on countries opposing his demand for U.S. control of Greenland is an appropriate use of trade measures in a geopolitical context and may be intended to promote negotiations. Speaking on a panel at the World Economic Forum in Davos, Greer said that the United States had a long history of using tools that sit at the intersection of economics and national security, including export controls, sanctions, and tariffs. Asked whether Trump was seeking negotiations over Greenland, Greer said this was possible and that the president had been clear about his expectations.
We're really honored to have you join us at the start of.
Still in Davos, where the World Economic Forum President Björn Brand has stated that the Gulf region is well positioned to play a leading role in global artificial intelligence. He highlighted major AI and data investments in Saudi Arabia and the UAE, citing the region's capital, clear strategies and partnerships with global tech firms as key strengths. Brand said that these efforts support economic diversification, innovation and long-term growth, and upcoming forum meetings in Jeddah will explore how the Gulf can contribute to responsible AI development. Vice Premier He Lifeng has stated that China never deliberately pursued a trade surplus. Speaking in the World Economic Forum, he noted that China is willing to leverage the advantage from its mega-sized market and more vigorously expand imports. Lifeng added that China is all countries' trade partner rather than an adversary, noting that countries' development is an opportunity rather than a threat to global economic developments. On a global note, Goldman Sachs has estimated that President Donald Trump's latest tariff threat could reduce euro area gross domestic product by about 0.1%, though the overall impact on Europe is expected to be limited due to economic resilience. A 10% tariff would cut real GDP by around 0.1 to 0.2% in affected countries, mainly through weaker trade. The bank noted that Germany would be hit hardest, with GDP falling about 0.2%. Under reciprocal tariffs and up to 0.3% under the blanket levy. Goldman now expects minimal inflation effects and says central banks would likely cut rates. In Europe, Bank of England Governor Andrew Bailey has stated that rising geopolitical uncertainty and global trade tensions are key considerations as the central bank assesses risk to financial stability. Bailey avoided citing specific triggers, but said geopolitical risks can have significant financial consequences. He also reiterated concerns over the U.S. Federal Reserve independence, warning that any threat to it would have substantial spillover effect for the UK.
In reducing bank rates. But the picture is more complex than that. Headline inflation rose to 3.6%.
The Office for National Statistics has reported that British employers cut jobs at the fastest pace since 2020 in December, while wage growth fell to a 3.5-year low, adding to signs of a weakening labour market as the Bank of England weighs further rate cuts. Data showed payroll employment dropped by 43,000 in December, while pay growth, excluding bonuses, slowed to 4.5% in the 3 months to November. Overall, payrolls have fallen by 220,000 since Chancellor Rachel Reeves increased employment costs in her October 2024 budget. The Kremlin has stated that Russia's central bank is monitoring price pressures and acting to maintain economic stability after a VAT increase. Moreover, Kremlin spokesman Dmitry Peskov said there are no immediate concerns about inflation that will exceed the central bank's 4 to 5% forecast. He added the current measures are effective and the government will step in if needed. Foreign Minister Sergei Lavrov has stated that Russia sees no reason to stop trading with Iran and will continue to do so whenever it considers it appropriate. Despite US sanction threats, he highlighted ongoing projects including the expansion of the Bushehr nuclear plant and key developments along the international north-south transport corridor connecting Russia, Azerbaijan and Iran. Lavrov further criticized President Donald Trump's use of tariffs as a political tool, saying that unilateral trade measures reflect a lack of confidence in one's competitiveness in global markets.
Дональд Трамп, он применяет пошлины, тарифы в качестве инструментов политики. Всегда, когда...
Back to the World Economic Forum to discuss it further with Professor at the University of London of Economics at the University of London, Mohsen Salamouni. Thank you so much for joining us here on the Economic Bulletin. Let's start off here, sir, by asking you what economic risks and opportunities are emerging from Davos in 2026, especially when it comes to Europe's strategic autonomy and global trade.
Good evening. I believe Davos has lost its power, and instead of becoming a decision-making and economic reform between all the countries and the new idea coming out of Davos, now Davos becomes more political and more is just like influence power, right, into other country. And the idea also is completely a change, and the change by Donald Trump. Davos used to be a place at all with the tariff implemented by Mr. Trump, and also becomes Mr. Trump's coming to Davos today with a new idea of really not globalization anymore. And alliance today is being selective in different ideas, all right? And it is not selective on trade only or on benefit, mutual benefit together. No, it's selective on who's supporting Mr. Trump. This is today what we see, and we don't see any whatsoever. It's like, you know, today in the global world, today we talk about, you know, the new green power, and everybody coming with a private jet, all right, and talking about the nuclear, the new energy and the new green power. That is not on. Also, there is a big difference today and between Europe and America, and the difference also between Europe and itself.
I'm glad, sir, that you brought up the idea of the politicization of the World Economic Forum. Now, given what's happening, and you've said that President Trump has been strong-arming the EU, how will the EU's Arctic security and Greenland policies affect the trade and investment, as well as, you know, investments in critical minerals, and as well as the relationship when it comes to the EU and the US economically?
Yes, today, actually, the power today is Russia, China, I should say China, first Russia, and United States. The power is there. Europe becomes really maybe third or fourth because Europe is very weak there, and economically also is weak. Military is weak there. Mr. Trump has made an agreement with Russia and the agreement was, all right, that Russia will pull the hand of Russia from Iran and from Syria, and also will pull the hand from Venezuela, and will leave, the field open for Mr. Trump to decide what is going to do there in this area. And also China pulled their hand from Venezuela to allow Mr. Trump to really take in Venezuela by force. And having said that, in the same time, Taiwan becomes a very important area to China. And sooner or later, we'll see China taking over that country. And I do not see...
So basically what you're saying here, sir, is that economic decisions are based on geopolitics rather than mutual benefit for the world.
Absolutely, absolutely. And Mr. Trump, and also Mr. Trump today is looking for really fund and economically looking for power. And the power is today, it becomes in technology and becomes in energy and becomes into mineral. And the mineral, it becomes very important today. Why it becomes very important? Because Mr. Trump, when he applied the tariff on China, and China, he did not realize that China owned 70% of the market of mineral with lithium, and that mineral which is used and is used in technology, it's used in chips, it's used into aircraft, it's used into the green energy today. That's why today Mr. Trump is looking to take country or to take over country who have sufficient energy, specifically in crude oil or in mineral. And that's why he has taken over Venezuela and has tried to take over today Greenland from Europe. And
well, this is, as you said, at the expense of the Europeans, though. But we've heard Ursula von der Leyen talking about a new independent Europe to reduce basically dependence on the US. Do you think that this is possible, or is it too late for the Europeans, given what you just said, that Europe is not doing quite well economically either?
I believe there is lots of leaders today in Europe. They are calling for independent Europe, and they calling for more cooperation with China. And also, I believe, before I say that also, that Europe, the war between Russia and Ukraine has weakened badly Europe and weakened the economy of Europe. Europe is behind in AI. Europe is behind also the economic growth in Europe is very, very weak, and also funding wise is weak. And thirdly, right, in the European military and the military support which they have given to Ukraine was completely wrong, and that's affecting them. They've lost also the huge investment which was available to Europe from Russia. The energy side also, they are buying a huge amount of energy, which at very, very expensive price. That is all affecting the economy of Europe and making Europe weaker. Europe today has to wake up and to pull her hand from the Ukraine, stop that war, and to start production and to start get energy as a cheaper price, all right, because Mr. Trump is enjoying that and enjoying his power. Plus that, Mr. Trump, his eye on the Gulf area. The Gulf area becomes very important to him because the Gulf area has a huge financial resources and has a huge energy.
We'll discuss the Gulf in a bit now, but if we could talk a bit about, the idea that you're saying that Europe needs to move away from the dependency on the US. They're starting to do this with India. Which sectors do you think are most benefit from the near complete India free trade deal, and what GDP impact could this possibly have on the EU?
Well, India has a huge market, for consumer market, and Europe will benefit completely out of that market. The production of Europe will be able to sold easily to the Indian market. Also, Indian have the technology in India, and specifically the AI in India is very, very high there. And Europe will benefit from that. Also, one thing is very important. That's why Europe and the European Union have signed a huge agreement with the Latin America, which is with Brazil and Brazil and the Argentina and all those countries and Iran. This is a huge country which it has 700 million people. That type of really agreement is a trade agreement where Europe the Mercs will provide, those countries will provide to Europe with the mineral and will provide Europe with food stuff there, which is Europe needed. This agreement is a huge agreement and is very important. And this agreement have been signed after negotiation of 23 years there. Europe just managed to sign that. That's very important to Europe. And Europe should really becomes powerful with that. Not immediately. No, it will take a number of years. Europe today depends on China in minerals. Europe cannot pull out of China in terms of the mineral and required to their industry, because China has they had the market and they have the industry, all right, for this mineral to be used for industry.
Okay, you spoke a bit about the Gulf there. Now, how can the Gulf AI investments accelerate diversification economically, as well as shape global AI governance? Now, you said that the US may be vying to cooperate with the Gulf in this state.
I believe the Gulf has an important. The Gulf is not just the Gulf. The Gulf is part of the Middle East, and the Gulf has a huge funding available to them, finance available to them, has also the most important element, which is energy. Those need to be secured. What type of security we are talking about? We have to be secure, we have to be stronger. Therefore, we be able to protect our wealth, our industry. With somebody like Trump around this investment and security and the sovereign fund of those countries, of those Gulf area are in danger of Trump taking them. Those sovereign fund, it's in the hand of America and in the hand of Trump. Therefore, we have to diversify those funds in different other countries. Some now the BRICS, which is being established right now, it's a very important, organization right now in order to protect some of this investment. And the Gulf also is need now to really update the technology by going into to establish the AI today, which is very important today, and it's important for technology, important for security of the Gulf area, and protection also for their economic. Also, I believe the Gulf has to have alliance, all right, and the alliance for also security and protection and industry. They have to start, establish and create industry.
Yes.
They must have alliance with Egypt. I'm not
Yes,
talking just because I'm an
your
Egyptian.
point is clear there, sir, but we're out of time. I'm so sorry to cut you off there, but thank you so much from London. That was the economic professor at London University, Mohsen Sadamuni. Thank you for joining us and thank you for your insights. Now, back to our news and moving on to Asia, where the People's Bank of China has kept its benchmark lending rates unchanged. The bank kept the one-year loan interest rate at 3% and the five-year loan interest rate at 3.5%. The one-year loan interest rate is used as a reference for corporate loans, while the five-year rate is used for real estate loans. President Xi Jinping has stated that China should maintain a reasonable share of manufacturing in its economy while balancing consumption and investment, as well as demand and supply. He called for the vigorous development of advanced manufacturing and pledged to make domestic demand the main driver of economic growth. Xi further called on all regions and sectors to identify their roles and foster a landscape in which upstream and downstream industries coordinate more closely. The U.S. Securities and Exchange Commission has revealed that Netflix revised its offer for Warner Brothers Discovery, making an all-cash bid. Netflix now plans to pay $27.75 per Warner Brothers Development shares to acquire its streaming platform HBO Max and Warner Brothers Studios. Netflix co-CEO Ted Sarandos stated that Warner Brothers board continues to fully support and unanimously recommends the transaction, which all parties believe will deliver the best outcome for stockholders, consumers, creators, and the broader entertainment community. Moreover, Warner Brothers also filed a preliminary proxy statement seeking shareholder approval. If approved, Warner Brothers Cable TV Networks would be spun off into a new publicly traded company, Discovery Global. Microsoft CEO Satya Nadella has stated that artificial intelligence must deliver tangible improvements in areas such as health, education, and public sector efficiency, or risk losing public support for the energy needed to run it. Speaking at the World Economic Forum in Davos, Nadella framed energy as a scarce resource that must be justified by real-world outcomes. He said AI is poised to build on cloud and mobile technology, spread rapidly, and lift productivity across industries and countries. Nadella added that the technology could drive broader local economic surplus and global growth beyond capital spending alone.
Health outcomes, education outcomes, public sector efficiency, private sector competitiveness across all sectors, small and large, right? And that, to me, is ultimately the goal. Global community.
In the commodities sector, oil prices were slightly higher on Tuesday as investors monitored U.S. President Donald Trump's tariff threats against European states opposing his push to acquire Greenland, while firmer global economic growth expectations and a weaker U.S. dollar supported prices. Brent futures gained 0.77% at $64.43 a barrel, while U.S. West Texas Intermediate crude was up 0.94% at $60. Gold climbed to a fresh record high on Tuesday, scaling the unprecedented $4,700 an ounce milestone as escalating geopolitical tensions boosted safe haven demand, while silver also broke above $95 for the first time. Spot gold gained 1.5% to $4,737.18 an ounce after reaching a record high of $4,750.49 earlier in the day. U.S. gold futures for February delivery climbed 3.2% to $4,742.70 an ounce. Spot silver slipped 0.3% at $94.37 an ounce after hitting a record $95.87 earlier. The white metal added about 147% in 2025 and has gained more than 34% since the start of 2026. Global stock markets fell on Tuesday amid investor caution, with major indices in the US, Europe and Asia all showing losses. In the US, the S&P 500 dropped 1.12%, the Nasdaq fell 1.29%, and the Dow Jones Industrial Average slipped 1.14%. European markets were weaker, with the UK FTSE 100 down 0.76%, Germany's DAX losing 1.05%, and France's CAC 40 declining 0.7%. In Asia, Shanghai's composite edged down 0.01%, Japan's Nikkei 225 fell 0.29%, and the Hong Kong Hang Seng retreated 1.11%. That brings us to the end of our economic news bulletin, but before we wrap up, here's a quick recap of what we've been covering. Von der Leyen vows to build a new independent Europe. British employers cut jobs at the fastest pace since 2020. And Netflix switches to an all-cash offer for Warner Brothers. That's it for today's Economic News Roundup. Thank you for joining us, and stay informed, stay ahead, and we'll be back with the latest updates tomorrow. But don't forget to follow Qnews on YouTube, Facebook, X, Instagram, and TikTok using the handle @QNewsEGY to stay informed.